So how do we come up with estimates of the black economy? So yesterday we looked at different issues in relation to surveys, using CSO data, using data from the revenue commissioners. But as we saw in the Primetime clip there, the revenue commissioners are very focused. They're looking at particular high-risk areas. Might not necessarily give you a sort of an indication of what's happening across the broader economy. Like some of the levels of claims are made against the different professions seem quite high. Like an average of 20,000 claimed are made per audit across the accountancy, the medical and other areas. So clearly there is a value in the resources going into the revenue commissioners. If you can get a group of people going out doing these audits and per audit they're bringing in €20,000, well, there would suggest to be a value for money. And the numbers of audits being undertaken seem to be quite large. So there does seem to be a willingness to increase or at least maintain the resources going into the revenue commissioners to allow them to undertake this activity and find out different areas. And some of the techniques they use seem to be quite lowbrow, low tech, sitting outside a chipper, counting fellas buying burgers. But then coming in the following week asking for a till receipt for that particular night and saying, well, look, we know you had 225 customers, you're saying there's 150. What should you do with those other 75 people that came in? What 75 people? Well, they'll have some evidence to say the number of customers, so clearly some of them wouldn't be going through the system, wouldn't be clocked on the till, and the person would be trying to, in a sense, hold on to the cash. So looking at estimating the black economy, where did that 13% estimate come from? If it's informal, unreported, cash, or even illegal, how can we come up with an estimate? So we finished yesterday looking at monetary estimates. This looked at the whole concept of cash in the economy. How much cash does the economy need for what the CSO says happens, and then how much actual cash is out there? And if you find a difference here, you might find an excess demand for cash in the economy. That if the CSO says there's 156 billion of economic activity, but then you can infer, well, how much cash would that need given the velocity of money? And if there's an amount of cash above that, we'll say, well, what's it doing out there? Is it in people's safes, or is it involved in transactions that go unreported? So the starting point is the quantity theory of money. So M by V is equal to Y. So M is the money supply, V is velocity, and Y is income. So the money supply, the velocity of money and income. So how much money is out there? How often is it used? And then you can get the overall level of transactions. If we had an estimate of money holdings in the black economy, the total income generated in the black economy could easily be estimated using the quantity equation. If we knew how much excess currency was out there, how much cash is actually in the black economy, how often is that cash used, then multiply one by the other, and you get YB, a measure of national income or GDP in the black economy. However, a difficulty arises clearly in estimating the money holdings of the black economy participants. So the standard assumption is that they take it in the form of currency, hard cash rather than deposits, given that deposits will leave a paper trail. So the anonymity of currency makes these difficult to trace and therefore help avoid detection. So if you want to avoid detection by the revenue, you want it all to be completely cash. You don't want a paper trail. So this is why the revenue must sit outside the chipper and count the number of customers. Because if they just look at the till roll and look at the declared income, they'll clearly match up. What they want to track is transactions for which no formal record is kept. So if we can obtain a measure of what we call excess currency holdings, we can use the quantity equation to estimate the black economy income. So how much money is in the economy? How much money does the formal account suggest we need? So one approach involves the econometric estimation. Econometrics has some use of an equation for currency holdings, which expresses this variable. So currency holdings will be our dependent variable as a function of several common determinants or explanatory variables. So what can explain the level of cash holdings in the economy? So for those doing econometrics, we're going to have cash or currency as our dependent or left-hand side variable. And And we're going to have income, interest rates, a time trend, and a measure of the tax burden as our explanatory or right-hand side variables. Why might people need more cash? Well, if incomes go up, you need more cash in the economy. If the size of the transactions is getting larger. If interest rates change, if interest rates get very high, there may be the incentive to put cash into the bank rather than spend it. A time trend, it could be just a general pattern through time, maybe picking up economic growth or inflation or some other patterns that emerge in the economy. And the key one we're looking for is a measure of the tax burden. If the tax burden gets excessively large, people may demand more cash. Why do they want more cash if the tax burden goes up? Well, they want to engage in more cash transactions. So the report there from Primetime suggested, in some way, an effective tax rate of 50%. I'm not quite sure how they're defining an effective tax rate. When we looked at income tax rates in Ireland a couple of weeks ago, we saw that the top effective tax rate is about 30%. But it's perhaps more importantly referring to the marginal tax rate. That if you're going to engage in tax evasion, your average tax rate doesn't matter. It's the marginal tax rate. How much tax can I avoid if I don't declare this €100? How much tax can I declare if I don't? How much tax can I avoid if I don't declare this €1,000? So that would be the person's marginal tax rate, and that is now about 55, 56%. And if you're in the top rate of tax, 41%. If you add PRSI, if you add the universal social charge, you can get up to about 55 or 56%. So if you're already in the top tax bracket and you earn an additional €1,000, you have to pay €560 over in tax and keep 440. Whereas if you get that money in cash, maybe you might take €800 and say, I'll do the job for €800. Don't declare it and hold on to the full €800. You go from having €440 if you claim the full 1,000 and pay the tax to having €800 if you take cash, don't declare it and hold on to it all. So that's the incentive we're looking at. So we're looking for some measure of the tax burden. So once we've estimated the equation, we can identify the effect of the tax burden, because that's the one we're focusing on currency holdings, and can calculate that part of currency holdings which is due to taxation, or in more particular, due to changes in taxation. When the tax burden gets particularly high, will we see the demand for cash increasing? So multiplying this by the velocity will provide an estimate of the black economy. So our equation will give us MB, that's money holdings in the black economy. We have V, the velocity money, and that gives us then YB, our estimate of the size of the black economy. So suppose the following equation is estimated. So these are just the variables we've defined already. So on the left-hand side of the equality, we have our dependent variable, C, cash or currency holdings. Then we have Y, a measure of income, R, the interest rates, and T, the tax burden. So we have our dependent variable. What can cause cash holdings to change? Well, let's put in the level of income, let's put in interest rates, and the one we're particularly interested in, let's put in the tax burden. A, B, C, and D are just the parameters. They are the numbers that define the relationship. They're what we're trying to find. So in the language of econometrics, they'd be the alphas and betas. We'll just call them A, B, C, and D. So we're looking for some particular number. The first element you'd look at is the size of the number, or sorry, the sign of the number. What is the relationship between a change in Y and a change in C? So you look to see whether B is positive or negative. By convention, we just write plus signs here. But when it comes to actually finding these numbers, they may be positive or negative. So we'd expect B to be positive. That when income rises, the level of cash rises. To support the higher value of transactions. We may expect C to be negative. When the interest rate is high, there's a cost to holding cash. If you hold cash, you just have it. If you have €1,000 in cash and hold on to it, the cost is the interest you're losing in the bank. So if the interest rate is 5-10% and you have cash, you're losing on that. So the higher the interest rate, we'll expect the lower the cash demand to be. So we expect those to go in the opposite direction. That'll be a negative relationship. When one variable goes up, interest rates, we'd expect the other to go down. And then we've D, our parameter related to the tax burden. I would expect that to be positive. When the tax burden rises, the demand for cash will rise. Well, there are expectations. So the issue is, what would happen? So we assume in some base year, maybe the start of the data set, the tax burden was T0. We assume that the black economy was 0. So then for any other year, the amount of excess currency holdings, so we're looking for CB, this is what we're looking for, the amount of cash in the black economy. And what do? We find an estimate of D, and then look at the change in the tax burden. We're expecting D to be positive, and then look at what's happened to the tax burden between T, which is the current time period, and T0, the starting time period. If the tax burden has increased, this will be positive. If T is greater than T0. So that would give us the amount of cash that has been demanded because of the change in the tax burden. So using this result then, the size of the black economy can simply be estimated using the equation we've shown before. Once you know how much cash is out there, multiply it by V, the velocity, and that gives you the nominal value of transactions that the black economy generates. So we can look at an estimate of this for Ireland. So a central bank economist, Gabriel Fagan, back in the 1990s was doing significant work on this area and published a number of papers that looked at the size of the black economy. So this is a graph from one of his papers which goes through the methods, the techniques and some of the data in relation to the Irish economy. It's up to the mid-1990s. So we can see his estimate of the black economy from 1963 to 1995. So starting off quite low towards the base, going through the 1970s, and then surging in the 1980s. That the demand for cash in the economy increased above and beyond what GDP would have indicated, above and beyond what interest rates would have indicated. So Fagan looked for an alternative explanation. What drove the demand for cash? He plugged in the tax burden. We have a 41% top rate of tax now. In the 1980s it reached 58%. You put PRSI on top of that and you could have a marginal tax rate of 75%. Someone gave you £200, you to give 150 for the revenue. So the incentive to evade tax because of the size of the tax burden was quite large. And his estimates of the black economy then increased throughout the 1980s with a slow decrease as the tax burden began to ease. And he put it at about 12% in 1995. So clearly this is 16 years ago. It is slightly dated. So you can look at the papers he published, one in 1994 and one in 1997, which can be read online. So the equation which Fagan estimated is pretty much like our own, except for one minor difference, or two minor differences, sorry. One, he looked at income in log form. So sometimes to make variables normally distributed, it's better to look at them in log form. And he looked at a cash holding ratio. So C divided by M1. C is cash, and M1 is cash plus bank deposits. So he's looking at a ratio. So if you look at the amount of the narrow money supply, how much of that are people holding in cash? Are people putting the money into the bank and taking it out as they need it? Or are they hoarding cash for some reason? His assumption being they're hoarding cash for cash transactions. And he also looked at the log of that variable. So C is the total amount of cash in the economy, and M1 is the broad money supply. M1 is cash plus bank deposits. Cash and near cash. So we've gone through the different variables. So here are his results. So from 1997. So minus 2.38. This term here, A, is just the intercept. We're not too concerned with that. It's generally only included for accuracy's sake. But the value of the intercept is in rare occasions of importance. But to give us where the regression line cuts the vertical axis is technically what it is. What we're primarily interested in is the values of B, C, and D. So do they follow the patterns we'd expected? Well, given income, we see the sign is positive. The interest rate perhaps is a bit counterintuitive, that's also positive. But the one we're interested in, D, in relation to the tax, is positive. So 0.0018 through with the tax. And Fagan also put in a trend, which might be picking up the effect of the interest rates. So he used this to get an estimate of the black economy up to 1995. If we go and collect some alternative data, which I've done, Jesus, we get an update to more recent times rather than stopping at 1995. So it's a fairly simple data set to put together. So this is just stored on Google Docs. So we have the variables, the year, the currency, this is in millions, and it's in current units, so it's in euro, so just pounds converted to euro. The M1 money supply, that's currency plus bank deposits. The amount of tax, or more technically government revenue. GNP, the size of the economy, and the average interest rate. So the Fagan data went up to about 1995, so stopped about here, when there was 2 billion of cash, 9 billion of the money supply, 17 billion government revenue, 47 billion GNP, and average interest rates of 8%. So then just adding subsequent data up to the more recent time, so up to about 2007 it's complete. So cash holdings had increased to 7 billion, 92 billion between cash and deposits, government revenue up to about 60 billion, GNP 2007 its peak of 161 billion, and we see interest rates have fallen to 4.5%, back from 17% in the 1980s. So you can plug this then into a regression package to estimate the equation. A regression package, software package, I use a data, and you could perhaps update and get additional data and get it as far as 2010 or 2011. So the estimate provided on Primetime was 13%. Backwards, please. So if we do estimate it, what do we get? So here we have the estimate using the updated data to 2007. So again, it's the ratio of cash holdings to the money supply, the intercept, income, the interest rate, the tax, which is again positive, and the time trend. If you wanted to look at the full results, so this is just the output from Stata, from running the regression. Here we have the dependent variable. This is the money ratio, the ratio of cash to deposits. And here then you have the explanatory variables, GNP, interest, the tax rate, and the year. Here you get the coefficient estimates. So the one we're interested in tax is positive, 0.0095. If you're into econometrics, then you look to see whether it's significant or not. And in this regression, there doesn't seem to be a huge amount of significance. This number here, significant, simply means different from 0. Doesn't actually mean anything. So this number should be above 2. And it's generally only above 2 for interest. But you can work your way through the different results in the regression. So it's just basically using a spreadsheet, plug it in the results, and get estimates of these coefficients. So using then these, we can get updated estimates of the black economy in Ireland. So Fagan is the blue. Using the estimates provided by the recent data is the red. And it goes up to 2007. And you can see it has been increasing in recent years. And by 2011, Primetime has suggested it's up to 13%. But by 2007, it was maybe 9%. So maybe the slowdown in the economy and perhaps the increase in tax rates have seen an increase. It's still not perhaps at the level seen in the 1980s, when the tax burden was far higher. But given the sort of dire straits the economy finds ourselves in, it is quite significant. So it does put doubts about the validity of economic statistics and the overall level of income in the economy. But I suppose when making comparisons across countries, they all have their own black economy. So if you're making GDP ratios, you can sort of assume that there is a black economy in all of them. So to say one country is better than the other may not be appropriate. So we can get an estimate of the black economy. So it is quite substantial, quite significant, and does seem to be an area that the revenue are targeting. So we'll leave that for today. I will take it up with the corporation tax on Thursday.